Tesla, like any other great growth company historically, are trying to share a story. And it's in that story that we inflate and add extra value to the share price. If you break down Tesla's current businesses of auto business, energy business, and service business, you actually only contribute $219 to the current intrinsic value of the stock. We add this extra $45 to the future story that we believe could happen. But it's still in that story that the opportunity exists. It's in that story of, can these things become real? That story of energy, solar, the hardworking team that are building the batteries, the factories that they have, the cars again becoming more and more futuristic, Optimus, the Cybercab network, the new way of being able to charge these vehicles. That outlook, the way that the future is going to look, is the story that we are investing in. The Megapack business, the FSD version 14 becoming so much more safe compared to humans, the absolute dexterity and exponential increase in the cortex fuels the brain of this robot, the semis, the Cybertruck, the team, and then obviously Elon. However, with any great growth company, it's all about the financial conditions being able to support that story. So in this video, I want to go through the seasonality of Tesla and how it follows certain patterns throughout the year. I want to go through the macro and how that impacts currently every growth company and every equity and every thing that's on the risk curve and the far end of the risk curve. I want to go through how I attribute the current $219 to the intrinsic value of the current share price and that extra $45, which is slowly being eaten away at the uncertainty that's currently out there in the macroeconomics within the USA and within the markets. And I want to go through the trajectory going forward into the end of the year and how I think that the second half of 2025 is going to be much brighter and much more optimistic. And the story of Tesla, the inflation that we currently attribute to the robotaxi network and to the Optimus developments, is going to become more and more realized. Wall Street firms will start to attribute more value to this story. So let's get straight into it. I believe that Tesla moves in seasons, and Q1 is always one of the most difficult months for Tesla stock. You can see that in Q1 of 2024, it retraced from $262 all the way down to $140, bottoming around mid-April. This year has also seen a very similar move down from $494 all the way down to the current price, which is $262, and it went as low as $250. This bottom usually reaches a finality around the end of March, start of April. This similar pattern could play out again. The impact of Trump's tariffs on major economic players like China and Canada and Mexico is starting to have a massive impact on the uncertainty within the market and on consumers, and the consumer price index, which is what the Federal Reserve use to be able to bring down the federal fund rates, which is how cheap money is to borrow. That's all going to hit all private equity and growth stocks and tech stocks and anything that's on the risk curve. And so Tesla's massively being impacted by this uncertainty at the moment. The S&P 500 index follows seasonality, which is that volatility into March from the start of the year. It usually spikes and it hits its peak, and that's usually where the S&P 500 bottoms and then goes on its rally throughout the rest of the year with medium corrections in between. I'm going to keep building a macroeconomic outlook just to give you a picture of why stocks are struggling at the moment, especially Tesla. So you've got the PrimeBook Global Equity Z-score, which measures the net outflows and inflows of major hedge funds. And you can see that this score is at minus 3.5, which usually shows a bottom in terms of the fear and the panic and the amount that these hedge funds are offloading. And that usually starts to taper down and stops and then goes in an inverse direction. Companies as safe as Costco have had one of their worst months since their inception. The Dixie is starting to show a massive deviation of -4. And usually when it goes into these zones, this shows that the dollar is getting weaker at a very fast change. And that is also going to start to impact in a positive way risk and growth companies, tech companies, and also crypto assets. Another indicator is the MOVE index, which measures the volatility in the bond market. And as you can see, when that spikes higher, it shows a lot of uncertainty, a lot of fear at the future interest rates. And when that starts to decline and starts to downtrend, it shows that investors are starting to have a different sentiment within the market. They're starting to feel more calm. They're starting to feel more comfortable and confident about the future of the economy. The Fed currently report interest rates at 4.5%. Consumer price index is 3%. However, the importance is the truthflation leads this indicator by nearly 45 days. So what the Fed are reporting of 3% is actually more like 1.38%. And that means that when inflation really starts to come down, which it will over the next few months, the Fed will reduce interest rates, which will have a massive impact on all growth assets, all risk. Now, going into specifics with Tesla, it's currently reached its oversold on the one-day RSI, which means that on that relative strength index, it's at such a bottom. It might have still a few more percent down to go. I can't know for sure. But usually at these levels, at these areas, with all of that story that's going to start to surface at the end of this year, this is usually an opportunity of a lifetime to be able to build a position in this company. Tesla follows the global M2 money supply growth perfectly. The correlation between these two is near enough symmetrical. And you can see here that as the M2 money supply starts to tick up, so does Tesla's stock price. And also as it goes down, so does Tesla's stock price. And it's actually near perfect. So you can see that if this is 2 months ahead and it leads by 2 months, then Tesla's likely to start to find a bottom around this month going into April. And it's going to probably start to move up if the macro outlook starts to improve, which I believe it will over the next 6 to 8 weeks. John Elrichman is able to gather analysts and average out their estimates. And he sees that Tesla is, over the next 5 years, a free cash flow growth of nearly 604%. There isn't a company in the Magnificent Seven that comes close to being able to outperform Tesla's free cash flow, which usually is a massive indicator in terms of how much the stock price will grow as well. So this is a pattern that has been created by a financial analyst who I really trust. And he says that we have these different waves down and then we have the waves up. And I think that we'll probably see a movement very similar to this as we move into the second half of the year. So a trend up to A, then back down, a retracement to B, and then a massive move, an acceleration to C. And as the story of the robotaxi network and Optimus becoming more and more realistic, we'll start to see that acceleration move to the back end of this year. That's what I would say is my estimate in terms of where we're going. And this is never certain, but this is just something that I believe, based on this data and based on these indicators, is likely to occur. It's also very hard to bet against anyone who's able to achieve this. And if you weren't already aware of how bullish I am, you've got Wedrush's Capital Management by Dan Ives, who is a really good financial analyst, specifically with Tesla. And he still estimates that there could be a 500 plus stock price by the end of the year. Tesla is so different to many companies within its industry. For a typical PE ratio for a car company, you're looking at Ford, which has 7, and Tesla's trading at a PE ratio of 128, which means that factored into this company, there is the story of what it could become. There is the story of the growth and the potential of this company that's already seriously considered by financial asset managers on Wall Street. So let's break down how we get to the PE ratio. You've got autos, energy, and services that contribute to this current intrinsic value of the company. These PE ratios, typical for the car company, is between 30 to 40x. For the energy, it's 50 to 70x because of the growth potential and the earning potential. And then for the services, it's 20 to 30x because of, again, the unlimited opportunity with the service earnings. So let's just plug those into the current earnings of the car company. You've got 14 billion times a 35 PE, which gives you a 490 billion evaluation. And then for the energy, you've got 3 billion times a 60 PE, which gives you 180 billion. And then for the services, you've got 1 billion times a 25 PE, which gives you 25 billion. This all contributes to the total evaluation and market capitalization of Tesla currently. If we break that down and we divide these contributions of 490 billion, 180 billion, and 25 billion earnings, divide that by the 3.19 billion shares outstanding, we'll get a total contribution to the current stock of 154 for the car company, $57 for the energy, and $8 attributed to the services. Which means that if you take off $219 that come from these three companies off the current price of Tesla, which is 262, maybe lower, and who knows where it bottoms, you can see that the difference is that $45. That $45 is attributed to what we find Optimus and cyber taxis could be in the future. That's the future allocation. So this is a really important chart that came from Cern Basher, and it shows the estimated consensus average for the earnings. And that red line, when it goes up, that means that Wall Street have modeled the realistic earnings of the companies. So you can see here, if you follow the two green arrows, that's the current share price of Tesla. Now, you can see it's going down because Wall Street aren't modeling the future impact of Optimus and the cyber taxi network. So right now, the current share price is just factoring in the three intrinsic companies that are currently contributing to the balance sheet of Tesla. However, when that story is clearer, when that story is hyped and there's more optimism about that story of Optimus and cyber taxis, you can see how that share price, the red arrow, goes so much higher. It's also massively contributed by the financial conditions being positive. So this is going to have relevance as Tesla is currently not valued for the realistic potential of the Optimus robot and also the cyber taxi network. And I'll go into more details with what they could contribute. And I've already created some videos on Optimus for what that's going to have in terms of its impact on the stock over the next few years. But just right now, the current price is trading at its fair value if you just base it on the three companies that it represents. Now, if you are an investor in Tesla, Elon actually says in his Q2 earnings call of 2024 that there's no reason to be an investor in Tesla if you don't believe in fully self-driving and autonomy. So this all leads to, could it be relevant? The relevance of all of this is that if you currently see the stock coming down, it's coming down to the realistic modeling that current financial analysts are giving and attributing to the stock price. They're attributing energy, they're attributing automotive sales, they're attributing service sales. They're not attributing the future story. And the story is going to start to unravel and become more realistic throughout the year. And so to be an investor and to position yourself, these are opportunities that will pay off potentially in the later half of this year and into 2026, 2027, and to the end of the decade. But these opportunities don't come around that often. And so the could it be relevant question that I always ask at the end of this is, I believe that Tesla's stock currently only factors in the three companies that can be currently contributing to the balance sheet and to the earnings and the revenue, and that can be modeled in. But the reason I'm invested, the reason why I remain bullish and optimistic is on the potential growth that comes from the realistic material impact that Optimus in units of 10,000, 100,000, and then into 2028 in the millions is going to have on the share price. And the impact, the immediate impact that the cyber taxi network that's going to get rolled out in Austin and then in many other states throughout the end of this second half of the year, that material impact in the stock, the story that's going to start to become clearer and clearer, should start to really impact the share price quite dramatically. So, if you got any value from this and can see the value that understanding that inflation that's attributed to the story that's not quite clear, please like, subscribe, comment down below. You're investing in the story. You're investing in the part of this company that's not clearly understood, that's not believed, and it's in that the story, the opportunity lies. So again, I hope you got some value from this, and I will see you in the next one. Thank you very much.